Hello everyone, it's really long time no see. Today, let's talk about hodling Bitcoin. You might be thinking Bitcoin has already broken past 120,000 US dollars. Maybe this is top. And some people are panic selling the Bitcoin they worked so hard to accumulate. But if we zoom out, the bigger picture tells a very different story. On-chain data show that the long-term holders are setting new records, while institutions and traditional finance are entering the Bitcoin market in ways we've never seen before. This is real logic behind the market. Before we dive into the Bitcoin holding cycles, let's take a look at some real numbers. So, how many people around the world actually hold Bitcoin? According to the CoinLedger's 2025 data, about 1.29% of global population owns Bitcoin. That's roughly 106 million people worldwide holding some amount of Bitcoin, whether it's just a fraction or a large stack. And within those 100 million plus holders, the distribution looks very interesting. According to the BitInfo chart's address balance data, wallets holding between 0 and 1 Bitcoin number around 55 million addresses, accounting for about 6.96% of the total Bitcoin supply. Addresses holding 1 to 10 Bitcoin are around 830,000, together holding about 10.36% of all Bitcoin. And then we move into the higher tiers, the so-called whales and even mega whales. These are entities like publicly listed companies, private equity funds, or even sovereign players. While the number of these addresses is much smaller, the amount of Bitcoin they control is absolutely massive. Who knows, maybe one of those whale addresses actually belongs to that well-mannered friend of yours. Among all these Bitcoin holding addresses, the number of coins untouched for 155 days or more keeps climbing, a clear sign that long-term holders are becoming increasingly steady. And according to on-chain data from Bitboy's one-year hodl wave, the share of coins held for over 1 year has seen a slight dip recently, but overall trajectory is still pointing upward, showing a stable long-term accumulation trend. This is exactly why Bitcoin is often called digital gold. Its scarcity is what defines its value, and it also explains why these hodling waves keep repeating. Over the past decade, Bitcoin was mostly the stage for crypto-native players, but today, even the most conservative traditional financial institutions are beginning to treat Bitcoin as a core part of their asset allocation. From Tesla and MicroStrategy to Coinbase, Riot, and Marathon, these publicly listed companies have long included Bitcoin in their financial reports. Even hedge funds are now exploring Bitcoin yield funds, letting out their Bitcoin, hedging it, and even using it as a productive asset. And it's not just Harvard. Institutions like University of Texas, Yale, Emory University, and the Rockefeller Foundation have all ventured into Bitcoin to some extent. The trend is clear. Bitcoin has moved from being questioned by traditional finance to being actively adopted by it. So many people ask, with Bitcoin currently valued at 120,000 US dollars per coin, in this hodling cycle, which is the better approach, buying spot Bitcoin or mining it? Buying spot means you're participating in the market's existing dynamics. Just like every other buyer, you can only compete for Bitcoin at the current price. Mining, on the other hand, means you control the production power. You can continuously acquire Bitcoin at a relatively lower cost. In a hodling cycle, the advantages of mining become even more clear. First of all, costs are relatively fixed, allowing you to effectively hedge against market price fluctuations. You can think of it as buying Bitcoin at a discount. Throughout Bitcoin's history, many of its early champions built their wealth primarily through mining, acquiring Bitcoin at its source, and then combine it with the spot trading profits and long-term hodling returns to achieve the substantial long-term gains. Secondly, mining creates a stable cash flow, reducing the risks of hodling. Even though Bitcoin's current block reward is only 3.125 Bitcoin and the per terahash earnings this cycle are indeed lower than the previous one, which lengthen the payback period, it's important to understand that mining gives you more than just Bitcoin each month. It provides an opportunity to balance your costs and returns without having to dramatically increase your initial investment or take on excessive risk. Looking at this from a long-term investment perspective, the combined investment in mining machines and electricity often offers a better cost-to-value ratio than buying Bitcoin at a high price. This is also why we see many traditional investors not just buying Bitcoin, but invest in mining farms and even directly participating in building mining capacity. While many people focus on publicly listed companies buying spot Bitcoin, their investment scales are enormous. Often billions of dollars, their returns scale with their investment size. For ordinary investors like us, the key is to choose what suits us best. And without a doubt, acquiring Bitcoin at a discount remains the smartest choice. The number of Bitcoin holders and the amount of Bitcoin being hodled are reaching all-time highs. The global on-chain data confirms this trend. The entry of traditional finance, university endowment, and pension funds has elevated the hodling logic to an institutional level strategy. With the implementation of the US BTC reserve legislation, Bitcoin has for the first time achieved the status of a national strategic asset. Mining and hodling complement each other. But in terms of the cycle, mining offers a better way to balance the risk. In other words, we are at a unique point in time. Bitcoin is no longer just an investment, it's becoming a globally recognized strategic reserve. So the question today isn't, is Bitcoin too expensive? It's, are you willing to be one of the future 850,000 whole coin holders? Will you choose to buy spot directly or take a steady, long-term approach through mining? Are you ready to view this global hodling cycle through a long-term lens? From a white paper to today's financial powerhouse, a single Bitcoin may be worth over 120,000 US dollars, but in the context of the entire financial market, 120,000 US dollars is clearly not the end of the Bitcoin. The crypto story is just the beginning, and hodling is becoming the main theme of this grand narrative. Okay, that is all for today's video. Just leave your opinions below. See you next time. Bye.